Everyone's saying Bitcoin's going to go to $20,000. Are you serious?
One of the biggest pitfalls for most traders is they don't know how to control their emotions.
Making money in crypto is easy. Keeping it is the hard part. When the markets are going down, everyone's always thinking of like, oh, like it's so hard to like hold on to these losses. I would argue that holding on to the gains is even harder, especially after even holding through losses for months at a time.
When you're going to start trading, not investing, trading, you have to understand that most traders lose money.
So what sort of like tips do you use?
A chart that does something like this is literally going to be the most profitable chart you could ever find. The best charts in the world go up and down and up and down because the volatility is the lifeblood of the market, and the volatility allows us to trade the ups and the downs.
That's the proof is in the pudding. Is like, if you can stomach the volatility, it's like, kind of like no risk, no reward, right? If you can stomach the volatility, you should be able to stomach the profit as well.
Do you have a go-to time frame in terms of your trades, in terms of when you think you're going to get in and get out? Or is it more based on, I have certain take profit levels that I will, once it hits those, I'm out?
DCA works really well. Now, the timeframes that I check charts on are the daily and the 4-hour chart.
And I do find that you lose a lot of these small details when you do zoom out, like to the monthly, for example. You miss all the stuff that happened within that candle, which is crucially important.
GM Crypto fam, and welcome back to another episode here on More Coin Bureau. Now, we have a really special video for you today, and that's because I have both of the Coin Bureau trading hosts on to do a singular alpha-packed episode for you on More Coin Bureau today. We have, of course, Dan the Man, the head of research at Coin Bureau, and Aaron, aka the Moonin Papa, over from the Better Traders as well. Gentlemen, welcome.
Thanks for having us.
Now, before diving in, guys, quickly, I will say that if you're not subscribed to the Coin Bureau trading channel yet, you're missing out. So do so right now. Not only will you see these guys cover the markets on a daily basis, but you'll also get to see interviews that both me and Guy have done with both of them, where we learned a bit more about their background and how they approach trading. And of course, nothing in this video is financial or investment advice. Please see your financial advisor, as well as our disclaimer down in the description. So with that spiel out of the way, I want to start with the first question. And this is obviously more related to the way you guys trade and the way you think about trading. I want to know, so how do you go about finding your trades? Do you focus on particular coins, pairs, or do you trade anything that makes sense based on the charts, i.e., is it narrative based around the coin itself, or is it just, here's a chart, I don't care too much about the fundamentals of the coin, I just want to trade it because it looks good?
I'll start with that one. For me, the way that I guess personally, the way that I trade is definitely based on more like narrative, but also in terms of trying to anticipate what narrative could come next. And the way that I kind of do that is just to think about what are the kind of major catalysts that are upcoming. A really good example, which I don't think will be invalidated by the time this video goes live, is stablecoin regulations. So like basically foreseeing that, okay, we're going to see a change to stablecoin regulations. And then you have to ask, okay, like which cryptocurrencies have a lot of stablecoins or have the potential to support a lot of stablecoins. Of course, the top of the list there is arguably like Solana that has lots of USDC. Then you have like Aptos that has lots of USDT. And even one that I think a lot of people are overlooking is, of course, XRP, which has RLUSD, which has been growing as well. It's a US-based stablecoin, so it's going to benefit the most probably from US-based stablecoin regulations. As a result of that, I guess you could say is if I know that, for example, XRP and also Stellar, which also hosts quite a decent amount of USDC and is being used a lot in payments. So any regulations around stablecoins and stuff like that suggest that, XRP, XLM, and these cryptos could do well, in the coming months. And then all I do from that point is I just check the charts and say, okay, is now a good time to enter relative to where that catalyst is roughly expected to occur, whether it's in April or May. And then you just basically hold until that news comes around, right?
Okay, got it. So more fundamental based what's going on in the markets right now, and then you'll try and you'll zone in on the chart. So it's come from the macro perspective and then dive into the micro.
Exactly.
Okay, got it.
Yeah, for me, I have about 50 different trading pairs that I watch every single day. And it's literally just flicking through it like I'm changing channels. I usually wait for a couple of conditions to be met, whether it's with specific indicators or price-based support resistance levels before I make a decision. But I pay a lot of attention to Bitcoin for obvious reasons. Bitcoin really moves the market. It directs the rest of the coins. There are also some patterns that Bitcoin tends to make. And we could see not repeat, but like exaggerated patterns for like top 10 and everything below the top 10 to happen next. But I think for most people watching this, you're probably going to be dizzy scanning 50 charts a day. Like this is something I do every single day because that's what I do. I love trading. I do it every single day. So for most people though, really, I think the top 10 is a great place to start. While we have had shakeups and change-ups over the last, 10, 15 years with the top 10 tokens, a lot of the majors have stayed somewhere around the top 10. So I think it's usually a good place to go, especially if you don't know which coins to focus on, because you can trust the market cap ranking a bit more than some random meme coin that may pop up and maybe basically just flash in the pan euphoria.
Okay, makes sense. I guess, and this is a broader question in general, in terms of the smaller cap coins, and I've seen people on, I'm sure you guys have seen these guys in crypto Twitter, they're trying to do like a technical analysis on a Shiba Bonk Inu kind of crap, like small little meme coins that can be so easily moved by just one singular trade. So it's your assertion then that, like, is there any coins below which market cap which you would then consider not trading? When I say trade, I mean basically in and out positions based on indicators or chart levels, as opposed to like a meme coin you just going on for a quick 100x spot trade.
Yeah. For me, it comes down to liquidity. Depending on the kind of trade that I'm looking to open, I might actually want to favor a low liquidity pair or a low liquidity token that's way down on the market cap ranking, like below the 1,000 market cap ranking. But 95% of my trades are going to be on centralized exchanges. I know some people are probably frowning upon that. There's this whole mantra in crypto, like not your keys, not your crypto. But the reality is that we do trade the majority of our coins on an exchange, and centralized exchanges, like them or not, they are a safer bet. I have a really hard time saying that out loud, but they are a safer bet than decentralized exchanges, mainly because if I were to trade a pair on Uniswap, and maybe it's a pair I'm not familiar with, but maybe it's growing traction online, I might actually select the wrong pair. Or it might be a honeypot. It might be a trick. It might be a scam. It might be the wrong one. It might be a duplicate, the same ticker, but it's the wrong, like there's so many things that go wrong. So I am not advocating that you keep all of your coins on an exchange, but for the most part, I do most of my trading on exchanges. And with that, when we're talking about which pairs to focus on, I think it's also worthwhile to focus on, like Dan was mentioning before, focusing on companies that have lots of stable coins and it's spread out. So like XRP, you're going to find that on pretty much every exchange possible. But if you're looking for Aptos or APT might not be available on every single exchange. So when you have a single trading pair or a coin or ticker, whatever you want to call it, on one or two exchanges, it's much more susceptible to pumps and dumps and things like that, which for better or worse could be really good for trading. It might be a nightmare for holding, but it could be really good. So it really does depend which trading pair you're looking for as far as volatility goes. And I think there's plenty of volatility on exchanges. You don't have to go dumpster diving to find the latest meme coin and trade it on the 1 minute chart. I think that's absolutely stupid because you're literally you're investing in lottery tickets at that point. You have a much better chance of just going to play Lotto 6, in my opinion.
Yeah. Dan, any thoughts there, Dan?
Yeah, I was actually going to say the same thing, is that I guess it really depends also on like what your trading strategy is. If you're someone who, like, you found some really small altcoin and it's something that you want to, let's say, swing trade that you think will get big in the coming months as a result of some catalyst or something, right? The approach in that case, obviously, you don't have to worry. I wouldn't say that you have to worry too much about the liquidity side, but how do I explain this? There's obviously like exceptions to the rule. I think it really depends on which chain an altcoin is on. So if you have an altcoin that's like on Solana or Ethereum or a chain that has lots of liquidity, like inherently, then something like that, even if it's not listed on centralized exchanges, might be fine not to trade, like day trade, like Aaron was saying. You probably don't want to be trading that on like a short-term chart. But if it's something that you're planning on buying and holding until a certain catalyst is met, then that's not necessary, or like, even just over a couple of weeks or a couple of months, then that's that's kind of like a good strategy, and or at least one that I've used personally, to be honest. And the other thing as well is to keep in mind that when you're trading these smaller altcoins, if you have some altcoin on a chain like Solana or Ethereum, and you anticipate that something is going to happen that's related to Solana or Ethereum, like something that will cause ETH or SOL to pump, because these small caps trade only against SOL or ETH, their price will rise as a consequence of whatever's happening on, like, assuming all else being equal. Sometimes you see a little bit of selling pressure into that. But typically, like these small caps that are on Ethereum and on Solana tend to be like higher beta plays on the underlying layer one, if that makes any sense. But if you're someone who's trading like, day trading or want to really get into the nitty gritty, I agree 100% with Aaron that it definitely needs to be something that's on an exchange. And not only that, but one thing that I like to do, and I should honestly do more, is to make sure and actually check the order books on the exchange to see like if there's enough liquidity. For example, if it's very common, I'm sure many people have noticed that like these newer small cap altcoins, a lot of them are listed just on like exchanges like Gate.io or Mexi, which are great. Like I personally love those exchanges. But the fact of the matter is that sometimes the order books are really thin, especially if it's just on one or two exchanges. So you definitely need to go and check and see, okay, like if I, for example, okay, maybe I'm like holding this token, it's gone up 10x or whatever in a day, but are you actually able to sell that? Is there enough liquidity in the sell in kind of like the buying side on the way down? Usually the answer is no. So you have to be very careful. Yeah.
That's a very good point. Yeah, exactly.
Yeah.
Liquidity, and that also means price impact, right?
Yeah,
And many
exactly.
people just don't think about the price impact of their trades. And also because not just the price impact of their trades, but the price impact of other traders trying to exit and enter positions.
Yeah.
And that can completely invalidate your trade. So that's why liquidity is very important. And of course, liquidity is driven by the depth of the order books. Now, speaking of trades, just come into actually the mechanics of you placing your trades. How do you do it? In the sense of, let's assume, do you use leverage or do you do spot? What do you prefer? And then if using leverage, how do you manage your risk? And specifically when I say that, like setting your stop losses, most importantly, but then also your take profits.
You want to go first, Dan?
Yeah, sure. I mean, I guess so. My personal strategy is I don't use any leverage. I just kind of, you could describe it, I guess, just as swing trading. Like find an altcoin, or I guess like I was saying earlier, is like I try and think, okay, what's the next big narrative going to be? What are the catalysts that could kind of trigger that narrative to enter the spotlight? I go check the charts of these cryptos that are in that narrative, and I say, how are they looking now? Are they supportive potentially of something, culminating that there's going to be some big breakout around this, whether it's next week or in a month or something, right? And if it looks like it's conducive to that, then that's definitely an altcoin that I'd be interested in buying and doing a little swing trade on. But to be honest, when it comes to really the more extreme end of speculation, my favorite charts are actually the ones where you have an altcoin that has a quality product, it's listed on lots of exchanges. The team is still building and everything, but you look at the chart and you're like, this thing just looks absolutely dead. Like you can feel the pain of like everyone who's buying all the way down and got completely shredded, like 99% down. But then you see it's like the team's still building, they're still doing partnerships, it's still whatever. And it's like, okay, well, if they, assuming they fall into a narrative, right? Like one of these big narratives is coming up, like a PayFi or like GameFi, right? And you say, okay, well then, sure, like I'll throw, some small amount of cash, right? Something that I'm not necessarily scared to lose. And let's see if, once this narrative gets big, if this altcoin gets caught up in that hype. So I guess that's on one side. But I do, I have showcased one trade on CoinBureau Trading in terms of using leverage, which again, I don't typically do personally. But when I do, the way that I like to think about it is the way that I set my stop loss is basically if the trade, like in a worst case, basically I set my stop loss at a level where it's like in a worst case scenario, if the markets are really like hemorrhaging, then I set my stop loss at a level where I would be stopped out and still have like a good chunk of that position left, if that makes any sense. A simple example, I guess, is unfortunately, like on Ethereum, where it's like you set a stop loss at a level, let's say, I don't know, that's 30% down, and then you use 3x leverage, so that when it goes down, but that 30%, then you get stopped out, but you still have some percentage of your portfolio left. Let's say, I don't know, like 30 or 40% of your trading portfolio is still left. And in crypto, I mean, I don't know, Aaron might agree or disagree here, but I would say that in crypto at this stage in the cycle, if you're down, whatever it is, 30 or whatever it is, 50, 60%, I would say it's not that it's easy, but it's doable to get yourself back into the break even zone. I would say it's not like you're like 95% wiped out or completely wiped out. You always want to set your stop loss and your leverage at a level where even if you do get wiped out in that worst case scenario, like that stop loss is hit, that you still have something left that you can, trade your way back up, if that makes any sense. And a decent amount, not just like, like $5 or something.
Yeah. I only use leverage with trading bots. And those trading bots right now are long only, mainly because I think that we're still in a bull market, even though it doesn't feel like it. But those bots are using super low leverage, only 3x, and they're using fixed stop losses that are really tight, which means, unfortunately, they're getting graded more than a piece of Parmesan cheese in an Italian restaurant in New York. So I keep taking losses and losses and losses, but the payoff is that once these things actually recover, there's going to be a trade that closes up like 40% without leverage. So like Dan was saying, like those wins are going to make up for the constant grading losses that are just like, you just turn off the pain. But I don't actively trade leverage right now. I would much rather focus on spot trading. And I think for most people, if you've been trading crypto for the last 2 months, I think you might agree with me that spot trading is just a little bit safer, a little bit better. You're still going to experience the pain that the rest of the market's going to be experiencing. But the benefit of spot trading without leverage is that, yes, you could buy Bitcoin at $190,000 at the all-time high. And while you're down a lot, you still have your coins. and you're betting on the fact that, well, you think the price is going to go back up and hopefully a lot higher. So when you're using leverage and you don't know how to use it well, you don't know how to use a stop loss, you can't stomach a stop loss, you don't know how to get your position sizing correct, you could experience a lot more pain. As we've seen we've seen enough blood in the streets. It's okay. The Warren Buffett quotes, like all those quotes, yes, we get it, everybody. We can stop now with the pain. But I think for most people, honestly, you don't really need to exceed even like 5x leverage. And we also have to keep in mind that the reason that leverage exists, futures markets exist, is because the idea is that you're supposed to use leverage to hedge your portfolio against a falling market. That's really why I want to stay positive and say that's the reason why it was invented. But if you think about it traditionally, if I think that Bitcoin is going to be dropping all the way to like $20,000 and I don't want to sell my Bitcoin, well, then I can use an equivalent amount of cash or maybe a little bit less. I can multiply that amount though to equal how much Bitcoin I have and then open up a short position. And that will sell this. Well, basically I'm purchasing a sell contract and buying it at a really, really, really steep discount. And I'm making a lot of money as the price goes down. So that way I'm hedging my portfolio. As the price of Bitcoin goes down, so is my spot, or rather my futures short position. That's really the purpose of leverage trading. But unfortunately, it's been glorified to this like Game of Thrones style, like 150x leverage fest where people get liquidated and they brag about it. Liquidation is not something to brag about. It's not really a badge of honor. It's nothing glorious about getting liquidated. It's much better to get stopped out. It's much better to use smaller leverage multiples, in my opinion, if you're going to do it, because you want to have enough cash to stay in the game. If you don't have money, you can't trade. So yeah, there's two sides of that, that coin.
Yeah. And let's not even mention the fact that market makers go on stop hunts, liquidity hunts, and they maneuver in the market. Mr. Wyckoff, they maneuver in the market to click out your stops. I guess this comes back to, okay, so both you're not a big fan of leverage, but in terms of thinking about your trades more systematically, do you have a go-to time frame in terms of your trades, in terms of when you think you're going to get in and get out? Or is it more based on, I have certain take profit levels that I will, once it hits those, I'm out? This will come back, come back to more broadly when we're looking at the charts. But in terms of time frame for your trades, is it based, do you have a daily? Is it on a week, per month? Like how do you time the trades?
I don't personally have a timer set for any trade. I'm going to wait for my specific take profit targets to get hit, for better or for worse. So sometimes that means I close a trade in an hour. Sometimes it means I close a trade 6 months later. But I've adopted a mantra of patience pays, and I stick to that, and it works really well. The only way that works, though, is if you have correct position sizing. So I'm a big DCA trader, meaning that I don't go all into any positions. I force myself to open up no more than 5 positions at any one time, which sounds really, really strict, but that's the way I like to do it because it makes me really, really picky. And then from those 5 positions, it's basically 20% of my portfolio. Then for each of those 20% slivers, I'm not even putting in that 20% into one position. I'm just slowly inching into that position. I don't want to rush into anything, whether it's a bull or a bear market. I never do that because it's always burned me. The times where I felt really confident, I'd put too much in and I'm thinking, well, this is a sure thing. It's going to keep going up. Nope. And then the other times where I was thinking, okay, well, this is definitely the bottom. I'm going to go all in right here. And it just keeps dropping. Nope. So for me, DCA works really well. Now, the timeframes that I check charts on are the daily and the 4-hour chart. If you're thinking about your targets, your price targets, I really do believe that the time frame will determine how long your trade should take, but you should also be more realistic about your time frame and your take profit targets. What I'm trying to say is, like, on the daily chart, if I were to enter a trade for Solana on the daily chart, right now it's currently around support. It could drop more or it could find support here. But if I'm looking to take profit at the all-time high, that's probably not going to happen tomorrow. It's probably not going to happen next week. I'm happy to be wrong. But on the daily time frame, I'm going to be thinking, well, this is a longer term swing trade. It'll probably take 30 to 60 days, maybe even longer. But if I'm on a faster time frame, then I'm going to have a much closer take profit target. I'm only looking to make like 5, 10%, which actually works out really well. It just depends on what your strategy is. I see, Dan, you're shaking your head a lot. You go ahead and jump in, man.
No, I agree with everything that you're saying. I think on my end, I also only look, like, on the Coin Bureau trading channel, I'm only looking on the daily. In my personal use, the closest I zoom in is the 4-hour. Like, going any more than that I think maybe once or twice a year I'll check the hourly chart, but going any deeper than that, it's just like a mess. But anyway, yeah, 4-hour daily, weekly, or monthly just to get a sense of like the longer term trend. But typically it's pretty, you can see it just based on the daily. And I do find that you lose a lot of these like small details when you do zoom out, like to the monthly, for example. Like you miss all the stuff that happened within that candle, which is crucially important for figuring out like certain levels and stuff. That's something I've noticed a lot. But yeah, and then in terms of like timing of like, I'm thinking like this trade should be hit by this date. Not necessarily. I guess the only thing, again, like I guess I'm saying it for the third time now, but the only thing that kind of informs that is like thinking about like catalysts that'll happen in the future. It's like what can happen in the future, and like not an exact date, but like roughly within the time frame. It's like, where am I seeing a whole bunch of announcements or a whole bunch of things that could happen? Where are all these things lining up? Is it in May? Is it in June? Is it just over the summer more generally? Like I personally think that we're going to see a lot of like new highs over the summer. That's my personal opinion, just based on like all these other catalysts. And then I say, okay, well, with that in mind, let me just like imagine, like how things could play out between now and then. Is it going to be a grind first on the daily? Basically, is now a good time to accumulate, or is there room for it to go lower before it starts recovering? And similarly to Aaron, I've learned the hard way that when you start to see things breaking out or breaking down, like basically I've been buying the dip for like the last month, and it just like it's, I guess it's a long-winded way of saying. And of course, some positions are down like still like pretty decently, but again, it's like I'm not really too concerned. I have my target in mind and like the time frame roughly. Right. And then I'm just, gonna just stick to that until, like Aaron was saying, if it comes in a year, then it comes in a year.
You guys are not trading the 10-minute charts.
No.
Not doing the 10-minute charts for the 1 hour trade with max leverage. Another obvious benefit of using no leverage is coming back to the point on timing is you don't have to pay funding fees for your trades. Mm. So yeah. You mentioned your chart in terms of the timeframes and that, and I think this is the broader toolbox. And in terms of chart patterns and oscillators and trend lines, tools you guys use that inform your trading. So maybe we can start with you, Dan. Like, what sort of do you try to focus and try to find any sort of chart patterns that you focus on, and then are they informed as well potentially by any indicators and oscillators or trend lines you put around it?
Yeah. So my favorite indicator by far is the Bollinger Band moving, the Bollinger Band in general, but the Bollinger Band moving average, and the kind of the oscillation, I guess you could say, for lack of a better term, around that, like between those two extremes of the bands on the 4 hour, on the daily, especially on the weekly and monthly on the weekly and monthly, it's a very good way of gauging if we're kind of like in a long term or medium term bullish or bearish pattern, and then same thing in the shorter term. And one thing that I found that's extremely useful. And I actually have a video about it coming out on the trading channel, which which might be live by the time this video goes live, is basically explaining how when, like, for example, a crypto price is crashing like crazy, what I like to do is I check the Bollinger Band and I start, for example, and this is what I do personally, but I'll start like on the 4 hour and I say, okay, is it above the Bollinger Band moving average on the 4 hour? Yes. Okay, then what's the next step that it could go up to? Maybe the Bollinger Band moving average on the daily, and I keep like moving up and up and higher. And it's like, okay, if it's above all the Bollinger Band moving averages from the 4 hour to the weekly to the monthly, then it's probably back in kind of this like a positive territory, let's say, where we could see more upside potential. But so long as if one or more of those moving averages, if the price is not above that moving average, that Bollinger Band moving average on one or more of those timeframes, and that's kind of like a warning signal. It's like, okay, this uptrend might not last, or it's just not as strong. And then in terms of patterns and stuff like that, honestly, like I'm a pretty big fan, and I know that there's a lot of like debate on this, but I'm a pretty big fan of like candlestick patterns. I know that they don't work the best, but like, for example, bearish engulfing, bullish engulfing, this type of stuff, that stuff, especially bullish and bearish engulfing in general, or like these shooting star, morning star type of patterns, that's stuff that like I've kind of like memorized like over the last, I would say, couple of years. And again, it doesn't always work, but it's a nice thing that's kind of like, not, I don't want to say as a confirmation, but it's like you have like a bucket of evidence and you're like, okay, should I be bullish or should I be bearish? But it's like, I think a really good example is like when you see, I don't know, something like a bearish engulfing on the monthly, for example, or the weekly or something. But then you can see on on the Bollinger Band that it's still looking fine, and you can see that, for example, the price has fallen, yes, but it's like at that Bollinger Band moving average on the weekly or the monthly. Then you can say, okay, well, even though it was a bearish engulfing, maybe it'll bounce from this level, even though by all account, like for example, when you see like, for example, a bearish engulfing, it typically means that the next month is going to be red, or if you see a bullish engulfing, like where the green candle is bigger than the previous red candle, then typically means the next month is going to be green. but it doesn't tell you how big that candle is going to be, right? You could have just like a small red candle or small green candle, right? And this is, I think, where the frustration comes in when people are using these candlestick patterns, is like, it does tell you kind of what's going to come next. And even when it does, though, it's like it doesn't tell you the magnitude of that move necessarily. Sorry for rambling there, but that's kind of like the main stuff I use in my trading. Yeah.
Yeah, for me, I use a combination of a lot of different indicators and measurements, but the workflow that Dan just described, I do it too. I didn't know that, but it's really nice to know that someone else basically does the same thing, where you're checking on multiple timeframes to get or to find confluence, whether it's bullish or bearish. Volume is one of my favorites. Most people ignore volume. Most people, when they open up a trading view chart, they delete the volume or they just kind of ignore those bars, but it's super important. It's super valuable information. I don't care about the red or the green colors. I make all of my bars gray because volume is volume. I think there are some indicators out there where you can separate if it's bullish or if it's bearish volume, and it does at the end of the day. But honestly, it doesn't matter because volume shows demand, it shows activity, it shows liquidity. So volume is a great indicator. On balance volume is an interesting one because on balance volume shows aggregate volume. It's basically a type of a squiggly line that goes up. It's really jagged, and it will either increase or decrease depending on that day's close and the volume. So if we have a massive green close, that line will shoot up really, really high. If we have a massive red close with a lot of volume, it's going to go down really low. The reason I like it is because it's a secondary confirmation indicator for the trend. I like putting a moving average on that. So this squiggly line isn't that helpful, but if I can see that the moving average is starting to move up, even if it's only making these little moves, it's really helpful for me to see, okay, there's a hidden trend there that hasn't appeared yet on the chart. The other one that I use is RSI, Relative Strength Index. I have a video that I just posted on the Coin Bureau Trading channel about this. Again, these are all simple, basic indicators, and that's the way I like to keep it. I love RSI because of its simplicity. It literally just shows you the strength of a chart. There are lots of different ways to interpret it, lots of different settings. But again, you can watch that video for more information, but it's really simple and I've been using it for years. And then of course, I love using Fibonacci retracements and especially extensions, but that's not so much of an indicator as it is like a measurement or a drawing tool, but it's great. And it's almost near magical for finding support and resistance levels for prices that have yet to happen. So it projects future support or resistance levels. Then we have proprietary indicators at the Better Traders that I really like the TBO, the Trending Breakout Indicator, which is like a glorified Ichimoku cloud with lots and lots of symbols, automatically plots support and resistance. But trend trading is really where it's at for me because we're talking about swing trading, things like that. Trend trading and focusing on indicators that cater to that will help you to stay in the trade as long as possible to squeeze as much profit as you can out of it. So that's my trading toolbox, I guess you could say.
Great. So the on-balance one, just to come back to a few of those.
Yeah.
So on-balance volume, is that kind of like it's weighted by the volume where it's in terms of the price change. So it's basically like it's an indication of whether the volume is bullish or technically bullish or bearish volume, right?
Yeah, exactly. So this is the chart for others. This is the total crypto market cap excluding the top 10. This is my go-to chart for basically like low caps, like everything below, in my opinion, below the top 50 market cap, because this is how those charts behave. So on balance volume is right here, OBV. So it looks like this really weird jagged line. And then I have this moving average on it. If I were to bring up volume right here below it, you can see that when we have like these minor closes of volume, it doesn't really do too much. Even on like this dump that we saw on February 24th, the red candle was big, but volume wasn't that big for that day. So we didn't see that much of a decrease here in on-balance volume. And the reason why I like this so much is that when I see the price, even though this is a market cap, holding a support level or getting rejected, please God no, we'll see what happens with that. But it's really, really helpful for me, again, to gauge the strength of the trend. Vice versa, when we start to get inklings of like, oh man, things are starting to break out, things are feeling really, really good, we see lots of volume coming in, well, that's going to be shown here in on-balance volume, especially when the moving average starts to move up like this. Then I'm going to get some extra confluence and might have to wait. And usually moving averages mean you have to wait a long time. But if you are wondering, gosh, this feels like a fake rally. Oh no, it's actually still being sustained. Oh, wow, it's actually moving up the moving average. That's a big deal. Then it's a really, really, really helpful way for you to gauge the strength of the volume, how much volume is coming in. And lo and behold, if we bring this up, we're going to see volume coming in a whole lot more. So again, these two are really powerful and they're really simple. They're just easy to understand. If we see volume coming in, prices rising, well, then there's support for the rally. If we see prices kind of stalling, but volume is falling, well, that means that the rally is kind of fading out and it's losing steam. And lo and behold, the prices fall.
And of course, you put the RSI there as well. You got even more confluence if it's going in the right direction in terms of momentum.
Yeah.
Okay, cool. So obviously, coming back to, you've obviously got this toolbox. And speaking of tools, are there any other tools you guys use that, maybe related to charting or something else, be it on a fundamental or technical level, when it comes to assessing your trades and thinking about what kind of trade you want to take, what sort of coins you want to just buy as the spot hold, or, a potentially interesting entry points?
Sentiment.
So
yeah,
when people are Twitter sentiment, what people are saying on Twitter.
When people are throwing tomatoes at you for being bullish on something or whatever, then it's like, okay, we're probably near a bottom, which has been happening for the last couple of weeks.
I can sense that. Yes, I get the same feeling.
But I would say that's the main one, is just sentiment, and also I don't know if this counts as sentiment, but the other thing, I guess you could say this is kind of analogous to volume that Aaron was just explaining, is like not necessarily sentiment, but like interest. Is like if a crypto project is doing something really cool, but like no one's paying attention, then that's you could make the argument that that's kind of like a little bit of a divergent. Well, I mean, depends on the broader context, right? Like Aaron was saying at the start of the video, everything kind of depends on Bitcoin. If Bitcoin's not doing well, then you can have the most bullish announcement on the planet. It's not going to do anything to the altcoin. Maybe with like XRP and like these larger alts, there's an exception, which is why, as Aaron was saying, like sticking to those top 10 probably going to be a little bit easier, because sometimes they can move a little bit independently of Bitcoin depending on the one. But yeah, that's the one thing that I also watch very closely. That's very interesting. Is just like when I see something is kind of building up, like in terms of they're building something's going to launch, again, I guess tying again to like into this whole catalyst idea. But it's like, if I can see that there's growing interest, growing development, growing something, then that, even though if it's not necessarily reflected in the chart, it's like, well, then there could be some momentum here where you do start seeing buyers coming in and that volume starting to grow as a consequence of this like building social interest, rather than like sentiment per se. But it's like there's more and more buzz around this thing. Islamic Jihad guy for Aptos. You know what I mean? Yeah. Like you see him building up the hype around the thing, and you're like, eventually it reflects in volume. I'm like, who would have thought?
Yeah. Just a quick point there on the sentiment. Obviously, how much of it is just anecdotal from what you've seen? Because obviously we as YouTubers have the good sense to see our comments, and obviously that's a good rough idea of the sentiment. But I mean, so when you say sentiment more broadly, I mean, are there any other particular tools? I mean, I know that there are the social tools. I know there's like Lunar Crash or Kaito and these kind of things which can give you a sense of sentiment. Is there anything else you like to look at to just get a broad, more data-driven view of sentiment?
Not particularly. I'm a little bit biased in the sense because before I joined the Coin Bureau, I was working for a sentiment analysis startup, and Lunar Crush was one of our competitors actually to the company to the startup I was working for. So I'm pretty intimately familiar with how these sentiment tools work. And I've personally never found them to be too helpful. I don't want to get too much into the details in terms of like how the language is analyzed and how things are weighted and all this type of stuff. But long story short is that I don't necessarily think even just checking like your X feed, depending on who you're following, I honestly think is as good as, or potentially even better, at gauging sentiment than an indicator that was put together. Because again, like the way that these indicators especially for sentiment, the way that they capture the data, because of course they have to filter out. First of all, they have to filter out all the trash, which is hard to do automatically, right? But if you're a human, if you're a normal person, and you're scrolling through the Twitter feed, you can see which posts are like, you're probably not even going to see the low quality posts, but this all gets sucked into the algorithms of these sentiment indicators. So to mitigate against that, which was a big issue that we had, and it was like one of the top things, is you want to separate the quality information from the low quality information. And once you've done that, then the next step is to actually code the different words and phrases and whatever that's being used to understand what is bearish, what is bullish, and how bullish and how bearish is it relative to other stuff. And this is stuff that is very difficult to do, especially as you see changing vernacular. For example, if you have everyone posting, "Are you sidelined?" Right? There's no sentiment. Yeah, exactly.
Yeah.
There's no tool that can capture that. And the thing is that a lot of the sentiment tends to be caught up in these kind of like trends and quirks and stuff that, again, like no machine can really accurately capture that. And that was the one thing that we were struggling with a lot. I mean, we were having some pretty good success, I must say, like behind the scenes, and the whole thing ended up like falling apart because like there was problems with investors, and But anyway, I guess I ended up going down that rabbit hole anyway. But point being is no, I don't, after having actually worked for a sentiment analysis startup, I don't really trust these sentiment analysis indicators. And I will add that even at some of our conferences, or at our Coin Bureau conferences, I'm not going to name names, but I even went to the CEOs of these sentiment analysis startups. And I asked them, I said, do you use this tool personally? And if so, how profitable have you been? And they can't give me an answer. What does that tell you?
Wow. Okay. Fighting words there, man. Okay,
Yeah.
cool.
Bringing the spice.
I take your word for it, man. I take your word for it, man. Like, yeah. Aaron, what about you, man? Do you any particular tools you got that you use out there?
Yep. I have a crystal ball. I have a magic 8-ball. I got some. I got an astrology starter pack.
You got some dice. You throw some dice. You know.
Yeah. Got some roosters too. So no, I use X for gauging sentiment. It's hard to know who to follow to get started, but there's some, like, to be honest, the loudest voices aren't such a bad place to start, even if they're wrong a lot of the time, even if they're just annoying. But paying attention to what they say does drive markets. It does drive attention, does drive a lot of eyeballs and therefore volume. I also pay attention to Glassnode, but I don't check it every day. I think I check Glassnode about once a week, mainly because that information moves so slowly. But those slow changes and shifts that start to take shape are really, really valuable. There is like a free level of Glassnode, but you don't really get enough. And to pay another fee for something else, it's a little bit like exhausting. But if you're someone that's really into data and looking at multiple different variables and things like that, as far as like the fundamental aspects and on-chain activity and buying and selling, long-term holders, short-term holders, hodl waves, all that fun stuff, it's a good place. There is a kind of like a freebie knockoff, which would be CoinGlass. They don't have everything that Glassnode has, but they do have a lot of really good information on their site as well.
Yeah, no, I use Glassnode regularly because it is on-chain. Obviously, it is a bit, it's daily updates and stuff like that. And they also have got great reports that they release, I think, weekly.
Yes.
So big fan of Glassnode. I think CoinGlass was actually more up-to-date information, especially when it comes to liquidations, liquidation levels, liquidation heat maps, funding rates, that kind of stuff. So both those are great tools. So quickly switching gears here. For all of those people, who starting out trading or thinking about trading, I'm curious from your guys' perspective, what are some of the biggest pitfalls that crypto traders make? And more importantly, how do you mitigate for these?
I'll start off because I suspect Aaron has a more refined answer to this than I do, because I think the ones that I have are pretty straightforward. I mean, number one is don't trade with too much leverage. Like Aaron was saying, even for me, like 5x is just like 2 to 3x is 2.5x is like the sweet spot. Like anything higher than that is like, that's like, I'm living on the edge, but I'm not like at the edge, right? That's the one. It's like, try and minimize the leverage. The second thing as well, I guess, is to understand that you can't, like, how do I explain this? In my honest opinion, making money in crypto is easy. Keeping it is the hard part, right? Like whether you're trading or holding or whatever, there's so many stories of people that, like, the number one, I'll actually use an example. We had a former colleague at the Coin Bureau, and she had invested, I forget if it was in like 2015 or 2016 or something. She had invested her whole life savings into Ethereum. Okay. Like when it was, I don't know, like $100 or $50. And what happened is that, it was like tens of thousands of dollars. And what happened was, of course, it went down, I don't know, whatever it was, like 5 or 10%. And she panicked and she sold. And then, if she had held it, then she would be like a multimillionaire. But what I actually told her when she told us this is I said, I almost guarantee one of two things would have happened. You would have either sold way too early, like it would have been up like way too high, or you would have thought that it would have kept going up, and you would have held, and you would have round tripped basically almost the entire game. Maybe you would end up, I don't know, like 50% more at the very bottom, right? And you would sell at that level saying it's over, and you'd be up, I don't know, congratulations, you've made 10 grand, on your life savings. But that's the kind of like the main thing is, I think, especially at this stage in the cycle when prices are going down and whatever, when the markets are going down, everyone's always thinking of like, oh, like it's so hard to like hold on to these losses. I would argue that holding on to the gains is even harder, especially after you've been holding through losses for months at a time, right? Once that position is back in profit, I think Aaron can probably, I can see him nodding, but like even whether you're holding or trading, if you have a position that was just like sitting and waiting and it was like down and down and down, and then finally it's up, you're like, you know what, maybe I'll take profit a little sooner here. And like that's another big mistake, right? It's like, no, you have your thesis, you have your level, just stick to until that level is hit. Don't be tempted to say like, oh my God, thank God I'm finally in profit. I'm 10% up. I know I was waiting for it to be 20% up. I'm just going to take profit here, right? I think that's another big mistake. Anyway, I'll leave it at that. I think Aaron has a few things.
So true.
Yeah.
I mean,
Man, this is so true. It's
you said it
emotion,
all,
emotion.
basically. If someone is looking to start trading crypto, the things that I would tell them to complement what Dan said is that when you're in profit, like this poor woman was not in profit. She sold too early. For one, she overinvested. When you're going to start trading, not investing, trading, you have to understand that most traders lose money. And if you're not losing money, you're in an unrealized loss a lot of the time. I have positions that I'm in right now. Some of them are in a little bit of profit. Some of them are in a little bit of loss. And that's something you have to be comfortable with. You have to be comfortable with seeing red one day, green the next, red one day, green the next. You have to learn how to disassociate the numbers from pain. When I started finally looking at all the numbers that I see when I trade more of as points, then it really started to free me from this gut wrenching feeling of, oh man, I just lost how many $1,000s in this trade? Or, oh man, I'm up $5,000 in this trade. Like the numbers shouldn't really be a factor. It should be about, am I following my trading thesis, like Dan said, and am I going to see it through? A lot of people, like this poor woman, she had a good idea. She's thought, okay, this is a good time. I'm going to invest in Ethereum. She overinvested. So she was overexposed emotionally and psychologically. So she can't handle any drawdown. And I agree with you, Dan. She wouldn't be able to, if the price went up 10%, you put in 10 grand, you're like, oh man, I just made $1,000 on this trade. And when markets get euphoric, it's really hard to hold on. People say hodl diamond hands, like they have no idea what they're saying. They really don't know how hard it is, especially when things are just like mind-boggling profitable. You can buy anything. You could literally just put everything, all of your life savings in the market, and it just goes crazy. But that is like this much of the entire market. Like if this is the entire bull, or rather the crypto cycle, if it's like a 4-year cycle, the part that everyone loves to talk about is this part way over here at the end. And it's literally this much time. Like it's less than 10%. I would even say like 5% of the time. Everything is going up. Everyone is excited. So if you can disassociate the numbers from being a pain point, but just being, okay, I'm going to see red, I'm going to see green. I have to learn how to accept a loss, and an unrealized loss isn't a loss. I'm just waiting. Then you can be on to bigger and greater things. It's a long answer. The second follow-up I would say is to start small. A lot of people, when the market is bullish, feel this sense of like missing out. It's a fear of missing out, right? Where you are going to put in way too much, more than you normally would, because you have this really good feeling. It's like your lucky day, or like, everyone's talking about this coin. I'm going to buy this stupid frog with purple eyes and a hat, right? So you buy it and it goes up and it's like, wow, this is amazing. And then that one works out. So then you take those funds and you put it into something else. That one didn't work out. It's okay. I'll just do the same thing I did before, but that one's not working. That one's not working. Throwing money at the market, expecting it to work every time. It's not how it works. You might get lucky once, but the majority of the time, you're going to have to understand how to regulate your emotions. And the best way to do that is to start small. If you're learning and you're starting with $10,000, put in $100 into a trade and see how that feels. When you start getting comfy with that, then put in $200. See how that feels. In our courses at the Better Traders, I basically kind of give people an answer of like the stomach gauge or the gut gauge. If you're looking at how much you're putting into a trade and you're seeing that amount going up and going down, and you're thinking about it while you're at the dinner table with your family, or you're at work, or you can't sleep at night because you're worried that the market's crashing or it's pumping and you're missing out, you're probably overexposed. Your gut's going to tell you a lot more. A lot of traders think, well, no, I have to be a robot with my emotions. No, I say listen to your emotions because they're telling you a lot of information. Your senses are there to help inform you about how you're feeling. But when the market's fearful, those are the optimal times for you to flip the script. Pay attention. Wow, I'm really freaking out. Everyone's freaking out. Everyone is screaming. Everyone's saying everything's big. Everyone's saying Bitcoin's going to go to $20,000. Are you serious? Pay attention to the fear, because then you can flip that and go, hold on, this is a little bit irrational. What's really happening? And then you can start scaling in slowly into a position. Things like that would have helped me so much more at crypto. That, and also understanding that because the crypto market is such a small market compared to the stock market, bonds, precious metals, Forex, commodities, like crypto is a little tiny drop. It's like basically putting in a bottle of Aquafina into the Pacific Ocean. Like it's the smallest little market. So any little wave that the ocean does, it's going to make that bottle go absolutely crazy, which is what we see and experience every single day. So
I
I'll
mean,
stop there. I can keep
it's
going.
Amen.
fascinating. No,
Amen.
because it's so true, and for both of you. And the reason this is so interesting is because many people think when they get into trading, especially newbies, it's like, oh, I need to learn the technicals about it. I need to understand all the technicals. But what you've illustrated, guys, is the fact that one of the biggest pitfalls for most traders is they don't know how to control their emotions. Because when you're making decisions based on your emotions, i.e. overtrading or taking on too much leverage or selling too quickly or allowing the sentiment to drive your thought process in terms of like to sell too quickly based on what you've seen and what you've planned out in terms of your trade, you are making one of the biggest pitfalls of them all. So it's, in the sense, it's like you got to understand yourself, and you need to try and find methods to be able to take away the emotion and like just view it purely from have the trade set out. It's like, how else and then coming back to this, like, Aaron, it's like, so what sort of like tips do you use to basically like, do you just think you don't pay attention to red? You don't, you imagine just like some funny numbers that you don't care about? It's like, it's magic internet money. It's not lost really, or?
I always look at it as unrealized profit. It's a really dangerous thing to do if you don't know what you're doing. Again, I'm DCA. So a DCA trader is instantly going, I accept red, and I actually want the price to go against my entry because I have more orders to buy twice as much and even more if it goes even farther, right? So I always looked at it not as an unrealized loss, but as an unrealized profit, because eventually those red bags will close in the green as long as I follow my strategy. I think a lot of people go into crypto without a strategy and without a trading plan, and they get burned and then they don't come back, where they're missing out on all the volatility that, yes, it's actually okay to have the charts do. A chart that does something like this is literally going to be the most profitable chart you could ever find. People think that the best charts in the world just go up and to the right forever, like a repeat of Hex. No, the best charts in the world go up and down and up and down, because the volatility is the lifeblood of the market, and the volatility allows us to trade the ups and the downs. And if there's a chart that has consistent ups and downs like that, it might feel really, really terrible to be an investor to buy a chart like that you're up 5% one day, down 5% the next day, up 5, down 5. But as a trader, oh man. So there are too many charts like that in crypto. That is exactly why I stay in the market, because the volatility and the sometimes irrationality of the crypto market is what makes it so profitable for being a trader.
Just to add to Aaron's point, like the proof is in the pudding in terms of, something that goes up gradually to the right versus, like the cryptos that have normal, like oscillating waves moving up gradually. You can actually see this. If you want proof of this, you can check the chart of like an exchange token. I don't know. I think a good one off the top of my head is Unisedleo, maybe, or one of these, maybe like a newer exchange token. But if you look at exchange tokens, you'll see the price action is basically just like gradually up and to the right, because what exchanges do is they basically take a portion of the fees to buy back and burn the token. And you look at this chart and you're like, wow, this looks amazing. Like, I just buy this, I'm going to be safe, it's going to be great. But then you actually look at the percentage gain, like over the period, you're like, wait a minute, this is over like a 2 or 3 year period. It went up like 5 or 10x, or maybe even less than that, maybe like, I don't know, 3 or 4x. And you're like, oh, well, I mean, that's pretty decent, but do I want to wait, 3 to 4 years for that gain? Or do I say, okay, I'm going to, find something else that has a little bit more volatility, but actually looks like it's going to explode and just go vertical, right? And I can have that gain in a day or a week or a month, right? That's the proof is in the pudding. Is like, if you can stomach the volatility, it's like, kind of like no risk, no reward, right? If you can stomach the volatility, then you can stomach, in theory, you should be able to stomach the profit as well. But the second thing I'll quickly note in terms of how to help like control these emotions, and something, to be honest, that I feel like I could do a better job of, not just for myself, but like for others, like when I'm, doing my videos, is setting expectations, right? When you set an expectation that like, I'm going to make this amount of money by this day, or this is going to happen by this day, and then it doesn't happen, that's the thing that's painful. But if you say, we're entering this like crypto cycle, and the cycle lasts for roughly this amount of time, and somewhere within this window of time, I can expect my trades or my bets or investments or whatever, whatever you prefer. Somewhere in this time frame, I can expect the prices to be somewhere in this range. That's better. It's way more healthy and a lot better than thinking, oh, I like heard on YouTube that this guy said that next week it's going to hit like an all-time high, and now I'm sitting there waiting for the all-time high and it doesn't come. And then you panic sell out of that, right? Because you had an expectation that it would come sooner. And I think one thing that has been frustrating for many viewers of Coin Bureau Trading is that I've been perpetually bullish like this entire time. And they're like, you keep being bullish, but prices keep going down. Like, what's wrong with you? It's like, well, yeah, it's because I'm thinking, and I have to, and I've started doing that now, like on Mondays, it's like explaining, it's like, look, guys, like just the reason why I'm so bullish is because if you just zoom out, like Aaron was saying, is like we have this 4-year cycle. And then like towards the end, or like, not always towards the end, but like along this path, we have these, 5% of the time where things just go parabolic. All that matters is those periods. Like the more that we're bleeding, the more that things go down, the more that sentiment gets beaten down. In my view, it's like the closer we get and the higher the chance that we have one of those, or the closer that we're getting to those periods, basically. It's like, this is great. It's like, it's going down. Everyone's struggling. Amazing. It means like once all the, bulls are gone, then it's time to run it back, right? That's the way how the market always works. But eventually it comes. Anyway,
yeah, 100%. Totally true. Expectation management. And it's even more difficult to manage the expectations of people who watch content than your own expectations, because everyone doesn't understand that there's so many external factors that drive prices in the short term that you have no control over. As a YouTuber, you just give your best analysis as you can. So quickly moving on to just to round off with, in terms of some of your personal stories, I'm curious to learn, and we'll start with Dan on this one. What was your most profitable trade to date, and how did you come across it, and how do you
My most profitable technically is Theta. It's this crypto that's like a decentralized YouTube, like a it's decentralized video platform. Basically, what happened, and again, it's kind of like a coincidence. And this was like way back when I was kind of getting started in crypto, like late 2019, and I was doing research. Basically, I don't know for what reason. Maybe it was because of the 2019 rally, and like I had started accumulating around that time, and I started doing like more research, right? Like I think I made my first crypto buy Litecoin was in like late 2018 or something. But then I was like accumulating. Or not accumulating, but I was like, in and out of research, like into crypto all throughout 2019. And what I did is I went through the whole top 500 or top 1,000 cryptos. I went one by one and I read the description, I checked their website, and I went through every single one, like literally 500 or 1,000 cryptos. And I took notes, and I basically made a list of like, which are the ones that I find the most convincing based on my very like amateur research. And I narrowed down that list, and I ended up with a list of, I don't know, I think a dozen or 2 dozen cryptos. And I wouldn't say a lot of them, but I would say maybe 30 or 40% of them ended up doing like incredibly well. Granted that I did get in early, like, at that stage in the cycle that, obviously it's going to be easy for cryptos to go well. But the more interesting thing when it comes to Theta is less so about the time that I bought and more the time that I sold, because I exited at a 200x profit. And it actually, and it was a small like investment at the beginning, so it wasn't like some crazy amount. But in retrospect, like, and this is what has informed my thinking a lot for this cycle, is I was thinking a lot is like, how is it? Because like I made 200x on Theta, 100x on Cardano. I think I made like 50x or 40x on Terra before. Like I sold right at the top before it imploded. And I'm thinking back, and I'm like, why was it that I bought those cryptos? When did I buy them? Like roughly in the cycle, and then also why did I sell? Right? Like that's kind of like the main one. Is like why? Because at that time I didn't understand technical analysis. I didn't understand the markets to the extent that I do now. So I'm thinking back, I'm like, why did I sell Theta like almost at the exact top at like $14 or whatever it was? Like I was literally within like a few percentage points at the top. And I realized it was because the way that I had structured my portfolio was inadvertently almost like measuring the strength of Theta versus Bitcoin. So like basically the amount that I had allocated into Bitcoin and into Theta, like basically as a ratio in my portfolio, like basically what happened is that Theta flipped my Bitcoin holdings at some stage. And I like panicked. I'm like, why is this thing going up so much? And I'm like, it's bigger than my Bitcoin holdings. This can't be right. And that's why I sold. Like that was literally the reason. And then in retrospect, and I go and check the Theta like BTC chart now, and I'm like, wow, like that was literally the top against Bitcoin. So I understand that, like, okay, then that means in the future when I'm assessing where is the top, then I also need to take heed of the Bitcoin pair, right? Because that kind of gives you like the risk on sentiment. And then for something like Cardano, that was like very much narrative based, like around a catalyst, where Cardano had like that big upgrade for smart contracts. I think it was in late 2021, and then they had like their testnet that went live in like September of 2021 or something. And by that stage, I was already up like, Jesus, I don't know, like I was up like 90x or like 95x or something. And I was looking, and I'm like, okay, and I think I sold either just before or just after, like in between the testnet and the mainnet, somewhere in that range. I didn't get the exact top, but I was pretty close. And then with Terra, that was one where it was more like, I would say it's like more sentiment based, where I had got one of my friends that actually recommended to me. He's like, hey, like I did research on this Terra crypto, super cool, and it has this stable coin or whatever. I'm like, okay. So I put in, I don't know, like a couple $100 or whatever. And right at the top, whatever it was at 140 or 120 or whatever dollars, I think I don't know. I think I got into it for Theta. It was like around 7 cents. For Cardano, it was like under 3 cents. And then for Terra, it was something like, I don't know, like $3 or $4, maybe $5. So like very, very low, below $5. And this ties into the point I think that Aaron was saying in terms of, you think you're so smart, you made all this money, and then you start moving the money around. So what I did is I could sense that like there was all this hype around like Terra and whatever, and I was just like, okay, I'll just exit then. because it's like, this is getting a little bit too intense. I can see everyone talking about it. It's probably not, because by that stage I was a little bit more, educated in terms of like what's going on in crypto. So I sold out of that, and I'm like, okay, I'll just go into Avalanche. And the problem is that Avalanche was the most, after Terra, it was like the most integrated into basically the UST stablecoin. Like Avalanche had actually launched a version of the Anchor protocol. So Avalanche, like it was like the second, like one of the largest losing cryptos, went down like 70%. And then what happened is I forgot, or I messed up the seed phrase to my wallet for the first time ever, and I actually lost access to that Avalanche. So it's like the universe was telling me that it's time for that crypto to go. I actually did manage to recover it with the help of a member of the Coin Bureau Club. Actually helped me. They actually brute forced my seed phrase, and they helped me recover that, which was awesome. But I mean, it wasn't a large amount. Like by the time it was brute forced open, but anyways, I guess like that's the main. Those have been, like, I guess you could say, my 3 most profitable trades. And thinking back, like literally for hours, and thinking like, why did I buy? Why did I sell? And what was the reason? And what was the methodology? Is there some uniting thing? And in retrospect, and sorry I'm rambling on this, but in retrospect, what I concluded was that you have a cryptocurrency with a strong narrative, a low price tag, a small market cap. Because it's like, it's one thing if you have like an interoperability, like liquid staking, modular thing, versus like, hey, this is like decentralized YouTube and it's backed by the co-founder of YouTube. It's like, well, this is pretty cool. Like, I can understand that. Like, well, sure, I'll buy a little bit, right? That's what I did with all these altcoins. And like a third of them, I would say like the average return was something like 20x or 30x. Granted that I did not sell most of them, but I will say, sorry to drag this on, and this is really a good example of like just how crazy things can get in crypto. The 2 biggest trades that I missed out on was Matic, Decentraland. So Matic, I sold at like maybe 20 or 30x gain or something. And the reason I sold Matic was because I thought, it was Polygon, for those who are unfamiliar. Like back in the day, it was Matic Network. So there was news coming out that like Optimism was going to launch, and Optimism was going to beat Polygon. And I was like, okay, well then I'm out of Polygon. Like, it doesn't stand a chance against Optimism. There's no way that Polygon's going to be able to compete. And then what happened is Optimism got delayed. And then Matic just went like, it went up like 300x from like my entry point. And I just completely missed that whole trade. And then it was the same thing with like Decentraland, but that was like completely unprecedented, where I found out about Decentraland. I was like, this is super cool. It's like a virtual world, like VR, whatever. So I bought some mana at like 1 cent or something like that, or under a cent. And then it went up to $5. It was a 500x gain. And I also sold out at like 15x or 20x or something. And of course, a lot of the cryptos that I sold out of, I rotated into other things, which then went down. And like Aaron was saying, like I started like, moving the money around, and that was like the worst thing ever. And that's like the number one lesson that I've taken for this cycle, is that I would say 95% of the altcoins that I bought so far, I'm still holding on to them, even if I'm like not as convinced that maybe that they're going to have a good run. Is that among like the largest gainers were basically ones that I sold too early for the wrong reason, basically. And I should have just stuck to my guns and said, I'm just going to wait, because if I believe in the thesis, right, that this is going to get big, I shouldn't let this, new flow of information, because I truly believe in like Polygon, Matic, everything is going to be big. But then I'm like, oh, but Optimism is going to come, and that means Matic is going to be over, right? Which I'm sure was something that was all over social media. So I took that, I acted on that emotion, you could say. And then the result is I lost out on like, life-changing gains potentially. So there you go. Anyway.
Cool. A lot of trades there.
Yeah.
And what about you, man?
To be honest, I don't really keep track. Not to say that I make gains and make profits every single trade.
Too many to keep track, man. Too many to keep track.
Yeah,
Too many
exactly.
What you do is
no,
win.
I think it's great. Like having those big winners is good, because it's a good boost to confidence. But honestly, I pay more attention to every single trade that closes in the green, even if it's just 0.5% or if it's 500%. The green is green. Green's good. I think that there is the temptation to, especially in crypto, to basically tell fish stories on X about like the biggest gain that you got this year, or show like your leverage positions where you're up like 50,000%, like people were posting about hype a couple months ago. And I think it's created kind of a toxic atmosphere in crypto, and also unrealistic expectations that we were talking about before. If you're closing in the green consistently, good job. You're doing better than 99% of everyone else out there. So Dan's made some good gains. I've made a lot of money trading crypto. I've also lost a lot of money trading crypto. The main thing that I focus on, though, is being net positive. If I can always close out of my trades in the green, even if it's going to take some time, even if I'm down 70%, like I have been in some trades, the most memorable trade I had was ZRX against Bitcoin. I used Bitcoin to buy it. I scaled in, bought more when it went lower, bought more when it went lower. And this is in 2019. And that chart literally just looks like a nosedive. And I kept buying. And then when it finally bounced, I was so elated because I had put in something like 1.5 Bitcoin, which was way more than I really wanted to put in at that time. But I was like, I'm going to just continue to DCA down because I believe this thing is going to bottom out. I believe this is going to happen. I'm looking at everything. Okay. The first move it makes, I go, oh, okay, cut the cord. Like, I'm out. I'm out. Only for it to hit all of my take profits and go up even higher. And I just felt like I felt happy because I had learned how to be satisfied with any amount of profit. But at the same time, I was disappointed in myself that I didn't stick to my trading plan. And I think a lot of people get stuck in that position, especially people, if you're watching this video that's, fairly recent, like right now, and you experience the meteoric rise that we saw in November 2024 up to like February, and you didn't sell, guess what? You're not alone. It's okay. So the best thing you can do is remember that, write it down. Don't do it again next time. Sell on when the price is going up. And if it goes up higher, guess what? You made money. Good job. You win. You win. That's literally how the game works. So I think it's better not to be focused so much on your big fish story, but walk away with the boat. Tell the big fish story on your boat in the lake that you own because you got so stinking filthy rich trading crypto and making consistent, bunts over and over and over. And you're just going to first base over and over and over and over. You know what I mean?
Consistency is key. Yeah. No, that's good. True.
I want to add, sorry, Nick, I want to add to Aaron's point just so people understand as well. At this stage in the cycle, my portfolio is at break even. I'm not sitting on like 100x gains or everything. And I guess this ties into Aaron's thing as well, is like expectations. Again, it has to do a lot with like when you enter, how much of that was luck, probably quite a bit of it, right? Like you could say like 70% luck, 30%, and timing 100%. But that's the thing is like, for some people, and like, maybe I'm one of those, is like that was lucky enough to get in at the right time and sell kind of at the right time. But again, even in terms of like the total amount of gains that I made, like when you include round tripping and losing and seed phrased loss and everything, when you actually add it up, it's like, oh, it sounds so amazing that it was like 100x, 200x, whatever. When you actually add it up at the end of the day, what I ended up with at the end of that cycle, it was not a lot. So this is, I guess I'm just underscoring to show people, especially the bears, that these types of gains are possible. Are they going to happen to you? Probably not. Should you be taking profits along the way? 100%. Is that something I should have done last cycle? 100%. Did I get lucky on a couple of calls? Did I sell just coincidentally at the right time? That was like selling at the right time. That was basically pure luck. Yes, of course, maybe it could have gone higher, whatever. And for some of these gains, great. But like, it's like making money is like I said, making money is the easy part. Keeping it is the hard part. Even as someone who's like, I've round tripped multiple 50x gains. I've like, anyway, it's just, if you follow Aaron, like Aaron is saying, if you follow a strategy, just stick to the strategy, which is what my plan is this cycle. Is like, I have altcoins that I have high conviction in. I've appropriately, whereas before I was just like shooting randomly into these micro caps, I now have like a more, staggered portfolio, starting with Bitcoin, going to like whatever, right? Like a Solana, Sui, and like working my way down the list. And I'm not sitting here like putting all my money thinking that I'm going to make another 100x on this particular token or whatever. It's smaller bets into these ones that could see gains like that. But most of my portfolio is concentrated in these ones where I'm expecting, like Aaron said, to walk away. It's like I'm in the green. It's not like some insane, like massive, thing, but I've walked away in the green and I'm happy and I'm good and I can, be at peace and I don't have to worry about that.
Wise words, guys. Wise words. So what a great way to end off. So thank you again, gentlemen. We can go on forever, of course, but I do want to leave some of the alpha for some other people for them to go and watch you guys over on CB Trade as you dish it out daily. And of course, guys, I will leave a link to both Coin Bureau Trading in the description, as well as Better Traders, where Aaron's teams helps traders out as well with courses and everything. So thanks again, guys. Hopefully we get you on again soon, and hopefully the audience here on more Coin Bureau sees more of you.
Thanks for having us on, man. Really appreciate it. It's been fun.
All right. Yeah.
Thanks so much.
Cheers, guys.
Cheers.